Welcome to the Be Better podcast with Infinity Real Estate Services. True stories from Bakersfield's business owners and entrepreneurs. We have sold over 50,000 homes in the Kern County area, and we are still going. Delete your limiting beliefs. If you have a dream, turn it into a goal. Only massive, inspired action will get you to where you want to be. If you're starting a business or looking to grow one, you're in the right spot. Welcome to the Be Better experience.
What's up, guys? It's Lee Barrison here with the Be Better podcast and Infinity Real Estate Services here in downtown Bakersfield at 2611 F Street. And I appreciate anybody and everybody that's on this podcast, knowing that this podcast is designed to really just grow and be better. Be better as a father, be better as a wife, be better as a cousin, as a niece, as a nephew, as an employee or an entrepreneur or business owner. Whoever you are out there that wants to be better, our objective is to bring some value to every single one of these podcasts, and I appreciate everybody out there tuning in. And so, with that being said, I have a very, very special guest, one of our great lenders that we work with here in town in Bakersfield. He works with Signature Home Lending here in Bakersfield. He's been in the business for quite some time. His name is Joe Navarro. Joe, say hi.
Hey, everyone. Lee, thanks for having me.
Thank you for joining us.
Always like doing these, man. These are cool.
Right?
Yeah, they're fun to do. Like you said, be better. Try to pass knowledge on to people as best we can. That's fun to do for me. So,
yeah, man.
Happy to be here.
Well, you're a positive guy, anyways. I mean,
I try to be. If I'm negative, I guess I'll maybe try to keep it to myself. But I try to be positive.
No, you're good people, man. We love having you here at the office. We love being in a very exclusive relationship with you in our business. And
by the way, we got to share a fun fact. We have to share a fun fact.
Why don't you break us off right now before we get started?
Me and Lee have the same birthday.
Yes.
Yeah, there we go.
Yes, we do. And that means that we are Pisces, and we like water, and we're really, really hard not to get along with. So
and I couldn't agree more.
Yeah.
And you can send gifts on March 13th to Infinity Real Estate.
Okay, yeah.
Make sure you put the name on it, though.
There you go, man.
Specify if it's for me.
We'll leave the plug in there in a minute here, Joe. Hang on. But Ashlyn, our co-host over here, she told me to keep this thing to a minimum, so that's what we're trying to do.
Right. She's the boss, so.
She is the boss. She can push the button and turn the button off if she ever needs to. So, but with that being said, man, I mean, we've known each other for about 2, 3, 4 years, going in there somewhere.
Closely since then.
Yeah.
I think we kind of, we were in the same industry for a while, so we kind of knew about each other, but closely, a few years.
How long in the business have you been?
22 years.
22 years in the business. So you're what, 12 when you got into real estate or into?
Yeah.
As a mortgage lender, I mean, I don't think they allow people to get license.
They hid me in the back. Yeah, they hid me in the back, and I never came up front until I turned 18. And once I turned 18, I was like, hi. Now I'm here. But I was I got into the industry really young because I bought a home really young.
How old were you when you bought your first home?
I was 18, actually.
Wow.
Yeah, it's a story that I've shared on a couple of these before. Because it's a good story for people that think they can't buy a home. Because I certainly thought I couldn't. Luckily, I have a great father who pushed me hard and basically made me do it. I didn't want to.
Sure.
And brilliant. He was brilliant that he made me do it. Turned into a career that I absolutely love, and can't thank him enough for making me invest at a young age and not letting fear or it's abnormal to buy a home that young. So
very abnormal.
Yeah. So him making me do that and supporting me, hey, you can do this. I'm going to do it with you. Here's some money for the down. This is the way of the future, son. Like, this is, he migrated to America. So this is the American dream. And I know that you can do it. So I'm making you do it. Okay, Dad.
Joe, as a father, I mean, I could only imagine how proud he is of his boy buying a home at 18 years old, because I mean, when I was 18 years old, let me think about that for a minute. So I was, I think I barely got my driver's license. I think I bought a car for $1,000 off an old lady that lost her license.
Yeah.
And
we all did that.
Right. But I mean, buying a home at 18 was not even, on the map.
No, and I can't take credit for any of it. It was all him. And let's even go back to, I had a work history that was acceptable at that age because he put me to work at a young age, taught me a lot of life skills, taught me how to make money. So, it's just, I can't credit him enough for putting me on the right path. And, when you're young, you don't get it. And that's why that story to me really resonates to the people out there watching.
Yeah.
That we talk to. It's like, you can achieve the American dream. You can own a home. It's possible for anyone. I did it, but I had someone help me.
Sure.
So we want to be those pillars of support, the people that pass on that type of knowledge, show people that it's possible to do.
Yeah, that makes sense. And
I better silence this.
So, yeah, no problem. So, Joe, you bought a home when you're 18, and you obviously had to establish some credit. You had to get some work history under your belt.
Right.
It sounds to me like your dad helped you out with the work history, but
Correct.
I'm assuming that he also guided you into having to, establish some credit.
So he employed a little trick that we in the industry use to piggyback off someone else's credit.
Yeah. Okay.
So he added me to some of his established credit.
Yeah.
And I instantly, from 1 month to the next, had established credit and a credit score and all that. I mean, at the time, I had no idea what was going on. I'm like, okay, Dad, whatever you say. But he knew what he was doing.
Sure.
He set me up the right way and made it happen.
Yeah.
So.
Well, that's a pretty amazing story. And you're a father, and you're also a basketball coach.
Yes, sir.
And you're also a husband.
Yes, sir.
And you also run a lending team.
Correct.
So tell us a little bit more about Joe's family, by chance.
Okay, so like you said, married with 4 kids. And, they're what our life revolves around once I get home, whether it be sports or, being better. We do that at home too.
Yeah.
We do that at home too, whether it be studies or working through procrastination or the struggles that, it's tough for kids right now. It's not an easy environment to grow up in. I don't think it ever has been, but it feels magnified now how difficult it can be with social media and all that.
Yeah, for sure.
So, so there's a snippet of that. The other side of it is my huge passion outside of work is coaching basketball. I started coaching in 2005. So I've been coaching for a while. Started in junior high, went to Golden Valley High School, and I've been at Independence High since 2008.
It's almost 20 years of coaching that you've done?
Yeah, a long time. Long time.
In retrospect, it doesn't seem like that long, probably. Huh?
No, it doesn't. It seems like it feels like I started another lifetime ago, though. It does, like coaching at Fruitville Junior High, coaching at Golden Valley High School. That just feels like crazy long time ago. But I love being a leader. I like the credit and the blame. Either one. I just like to know that steering the ship in one way or another.
What I'm doing right, what I'm doing wrong, and
exactly
how can I be better?
I don't shy away from the mistakes.
Sure.
I own them, try to use that for growth, and I try to teach that too.
Yeah.
I tell my players all the time, basketball is one thing, but I'm more coach because this is synonymous with life. I'm always in their ear, whether it be life lessons, how to do better in school, when they hit the workforce. I talk a little bit about buying homes here and there, all those types of things. Again, competing and brotherhood,
sure, yeah,
team unity, all that is just completely synonymous with work, life.
It sounds to me like it may have been the same conversation that your dad had with you as a kid growing up,
100%.
right?
Yeah.
So,
similar.
let's talk about that for a minute, because as a parent myself, I want to know these conversations. Maybe I'm missing something, but I'd love for all my kids to buy a home when they're 18 years old. So, what were some of the things that your dad did or told you to do in order to influence you to buy a home when you're 18?
I feel like it was always his plan. I just didn't know about it.
Okay.
Looking back, and just him putting me in the workforce really young, and build things like building credit. All those things that you need to buy a home that people do traditionally in their 20s or 30s. He just had me doing really, really young. And I don't think that's one size fits all. I think everyone's going to have their own, timeline on
Sure.
when they do things, when they choose to do things at their own, speed. So I think it's an extreme scenario. But it was important to him, and he made sure he made it happen. And I hope that I can pass that on to my kids one way or another.
That's a legacy right there that he's building.
Yeah, no doubt. And I take a lot of pride and responsibility in continuing that, making sure that my kids are better than I am, and just the way he wanted us to be the same. So it's not just something I look forward to. I also feel like it's kind of a responsibility. Like I have to make sure.
No, you got to level up, right?
100%.
Yeah, your dad's looking at you right now, saying, "Don't level down, son."
No,
right?
100%.
Yeah. So I mean, you have 4 kids. How old is he? What's the oldest?
So my oldest is 17.
Okay.
He's a junior at Frontier High School.
Now is he or is he already in the process of perhaps buying a home when he turns 18, or
You know what?
shortly
No,
after?
definitely not.
No. Okay.
I'm sure you know this. Each child is different.
Sure. Yeah.
So I don't see that for him. It's not an ambition of his. It's just really not right now. So that's a little bit on the back burner for him. Now my daughter, who's in junior high, she wants to buy a house tomorrow. So
Does she want to move out of mom and dad's house, or does she just want a house?
We always joke that she's 12 or 13 going on 20.
Sure. Right.
She's just super mature and always, right in front of the curve, always trying to do something first and, be on top of everything. So I think she's going to be maybe the one that's trying to buy super young.
Okay.
But we'll see. The other ones are still real little. So
yeah, I can appreciate that though. I mean, the 17-year-old boy, like you said, I mean, different strokes for different folks, right? So I mean, like, you were ambitious enough or didn't have a choice, I guess, prior to 18 to buy a home, but your son, on the other hand, might be having a different plan of life, right?
Well, I mean, don't get me wrong. I could have said no. I could have said I'm not doing it.
Yeah.
But I wanted to move out. I wanted to grow. I wanted to do my own thing. And it's like, okay, well, you're not going to go pay rent somewhere. You're not paying rent.
Yeah.
You're going to own a home then. Okay. Let's own a home then. And that's where it happened. And we talk about that all the time.
Do you?
How, paying someone else's mortgage through rent.
Yes.
It's not a smart investment, and how you should do it from yourself. So I learned that as a young age, and I talk about that all the time. We've been in this business for a long time. How often does someone come up to you and go, "Man, I wish I was still renting"?
Well, you know what, Joe? I tell you what,
doesn't happen.
Yeah, man. I mean, and you, I'm sure you have these conversations with people all day long about, whether I should pay rent or whether I should buy a home and get a mortgage. Now, knowing that you're in the mortgage field, and an expert in that arena, as far as the folks out there that are still paying rent, knowing that rent has gone up dramatically, right? Yeah. I was talking to somebody, I think today or yesterday, actually. I asked you about I was talking to somebody in the office here, and they're paying $1,800 a month rent for a 2-bedroom, 2-bath. And another gal that I was talking to has a 2 and 2, and she's paying $1,400 a month. And I mean, that to me seems like a mortgage payment, if you ask me.
Yeah, I mean, it's getting up there.
Right.
Yeah.
And so for anybody out there, Joe, just segueing into business, but for anybody out there that's listening to this podcast, what would you recommend folks out there that are paying rent or have been paying rent, and how to eliminate having to pay rent and then get their own property? What are the advantages, and what do you see in their future?
Well, we just talked about the obvious one, which is, if you already have an expense such as rent, why not have it go to something that you own?
Sure.
Make it your own. Obviously, we talked about the whole American dream aspect and just pride of ownership, like having something that you say is mine. I think there's a lot to be said about that.
Yeah.
But there are some, people that will say, well, that doesn't matter. Okay, well, let's say it doesn't. Let's say that doesn't matter. Well, there is definitely advantages just in business, just with currency, just with saving on taxes. So, for instance, paying rent is not a tax deduction. It doesn't help you when you go to file taxes here in about 30 days. We're all about to do that.
Right.
If you're paying a mortgage, you've got something in the mail that showed up about a month ago, and that thing's a deduction.
Sure.
And if you paid rent last year, You didn't get one.
Sure.
And it's not a deduction.
The owner of the property got one.
Exactly. And you paid for it.
Right. Right.
So,
Yeah.
I mean, there's something to think about that. It's, yes, let's push the other things aside. Okay, let's just talk about how does it benefit you? Well, there's one huge benefit, having a deduction on your taxes. Who doesn't want to have their money go towards something that will help you pay less taxes?
Sure.
I mean, no one's going to say no to that.
Not in California, at least.
Yeah, and it's a huge benefit. It's a huge benefit, and you're paying it anyway. You're paying rent anyway. So why not, even if there's a small increase, why not have it go to something that's yours? And the next part of it is it's building equity.
Yeah.
Again, we talked about in 22 years, no one comes up to me and goes, I wish I was still renting. No one says that. Like everyone says, man, my house has doubled, tripled, quadrupled in value, or I sold it and bought a new one and upgraded, or I kept it and turned it into a rental.
Right.
You showed me how to become an investor.
Yes.
Now I have multiple properties. Just building that wealth, whether it be generational or you're a first generation home buyer. That comes up a lot. That's setting the tone within the family. It's like, okay, I'm the first one who's following. That type of where you're thinking next level. Really trying to get your family to think in that way. Where we all need to own homes.
Sure.
We all need to have generational wealth starting, and there's a ton of benefit to it.
Yeah,
a ton.
There's really no downside to owning your own home. I mean, to be honest with you, the only other option would be to rent. I know when when I bought my first home, I was 22. I was 22 years old, and I was living in a garage conversion on the corner of South Brown and Lincoln, and I was paying $250 per month.
Okay.
Right? And so I ended up buying a home, my first home. And when I bought that first home, Joe, I stood up all night long sometimes, just thinking about how am I going to have to pay this mortgage? I mean, I'm walking away from $250 a month paying rent, but now I'm bouncing into a payment of about $1,000 a month. How am I going to go off and try to afford this place? Plus, I got to pay utilities. Are you serious?
Yeah.
Well, it all worked out. Basically,
It usually does.
Everything came into fruition, and basically I ended up, not having to go out to eat as often, or or just be a little bit more simple and more moderate on things that I were to pay for. Sure. So anybody out there that is paying an astronomical amount of rent, because I don't care what borough you live in or what city or neighborhood or whatever, it really doesn't matter in today's society. I mean, in the rental world, I mean, everybody out there is having to pay a very exorbitant amount of rent typically. So there's a new program that I wanted you to tell everybody about that's very advantageous to a lot of first-time home buyers.
It's everything we're talking about right now.
Correctamundo, exactly. That's where we're rolling right into this thing. So why don't you tell everybody out there, Joe, what this program is and what it entails?
So it's a program that is being run by CalHFA, California Housing Finance Agency, and they've been around forever. I've been around 22 years, and I always remember them being around. So they're not new to the first-time homebuyer assistance programs.
Sure.
But this is a spin-off of a brand new program that started last year, was super popular.
Didn't last long.
And they ran out of money in about a week.
So
popular, helping so many people, they decided to roll it. This is phase 2.
Got it. Okay.
So we've been ramping up. We've been talking to people, educating people. The registration portal opens on April 3rd.
Okay.
So there's still time to enter. So you'd want to contact one of us ASAP to start the process. All you need to do is get...
Joe, I'm sorry. Yeah. I'm sorry. Again, April 3rd, though, is when the registration takes place.
And the registration is going to be opened almost the entire month of April. So it's not do or die on April 3rd.
Okay.
But because there's just so much hype around this program, last year it was enormous. Everyone who did it is just cheering, elated that they got in, that everyone wants it. So what are they doing? They're doing a lottery. So you get in there, you register into the portal, and if you win a lottery ticket, then you're in.
Oh, you're kidding me.
It's huge. It's
Okay.
huge. Yeah. So, it's a little bit of a luck factor there. But you can't play the lottery. You can't win the lottery if you don't play. So that's what I keep telling people.
Yeah.
You got to play the lottery. Because I've had quite a few people tell me, what are the chances of me winning? You'll never know if you don't play. And
Sure.
It's no skin off your back. I mean, yeah, it's a little bit of work getting pre-approved, but it's people that need to buy anyway.
Yeah.
Because, at the end of the day, if you need to buy, you need to buy.
Yeah.
Why not take advantage of this program?
Mm-hmm.
It's the perfect time. We're about 30 days away from the release point. And
Just after tax or just prior to tax season, basically, too.
Exactly.
So anybody out there that's going to get a refund on their taxes, also that they may benefit from the program, right?
Exactly. And to explain the program briefly,
Yeah.
it's a secondary loan for 20% so that you can come in with 20% down.
Okay.
Now, why does 20% down matter? Because as a lot of people know, you don't need 20% down to purchase a home. Well, you no longer need the mortgage insurance when you come in with 20% down.
Right.
So
right.
they're giving you that 20% down loan at no interest with some shared appreciation so that you can have a dramatically lower house payment. And on top of that, qualify for more. Because they go hand in hand.
Yeah.
If your payment's lower, then you can qualify for more homes.
Affordability goes up.
Exactly.
Yeah. Right.
So it's a program unlike any other one that I've ever seen before. I tell anyone that's a first-time buyer, first-generation type buyer, this is for you. You got to try it. You got to get into it. I was lucky enough to get people into it last time. Called, checked on them. I check on the clients a couple times a year, and they're ecstatic.
They're happy.
Man, I'm so happy we got in this.
Yeah.
I talked to a bunch of people. No one got in it. Thank you so much. They're just elated to be in it. And I hope that we can replicate that this year and get some people in. I mean, it's a little different this year with the lottery.
Yeah.
But if you're out there watching and you're even remotely thinking about buying a home, you need to get in touch with us right away.
Yeah.
Because we're experts at the program. We know it inside and out. We're a preferred lender, which is required because we vouch for you until CalHFA they're ready. Fill out a little form for you so you can get into the portal. So that's coming here soon. So if ever a time to buy and you're looking,
This
right
is
now,
a good program to look into.
Yeah, no, this is huge. This I don't know that it's ever going to come back.
Right.
It's that special. So
Right.
I think anyone in that type of scenario needs to jump on this.
That's a really bold statement, Joe, that you said something like, I don't ever know if it's ever going to come back, or this might be a once in a lifetime type of opportunity for people out there that want to. You got to play though.
Yeah.
So at the end of this podcast, we're going to let Joe give you all his contact information. So that way, if you guys do want to play the lotto with this new CalHFA program, then you know who to get in contact with. It'll point you in the right direction. So, but with that being said, Joe, I'm just out of curiosity on my own end, the loan, right? So, because I remember there's been a number of different programs out there in the past that we've seen, and whatnot, and the 20% down second.
Yes.
Now, is that do you have to pay that money back at the close of escrow, or is there a lifespan on that amount?
So your first mortgage is a regular 30-year conventional loan.
Okay.
And the second mortgage is the same. It's a 30-year conventional loan at 0% interest. So at what point would someone need to pay that back? Transfer. So you decide to sell the home. They'll let you refinance once. So say rates go down and you want to take advantage and refi. You don't need to pay it off at that point. They'll let you keep that second there unpaid and refi. So that's huge because you can lower your payment again in a
That's
couple
good
years.
stuff. Yeah.
Yeah. But let's say you decide to move or something drastic happens 10 years from now. That's when that would come due.
Okay.
At that point. So it's not something that you need to make monthly payments on. It's not something that's...
It's 0%.
It's not accumulating interest. Yeah. I mean, there's interest-free loans don't really exist. And
No.
if they do, it's for a very short period of time, like on a credit card. Open this credit card and we'll give you 12 months, no interest, something like that.
Yeah.
But not a mortgage for 30 years.
Right.
Yeah. So there is some shared appreciation that comes into play with that. So that is the only part that is an expense. So what that means is, let's say you sell the home 15 years from now and you have $100,000 of equity. You do have to share 20% of it with CalHFA.
Okay.
So that's something to think about.
Yeah.
It hasn't ever deterred someone from applying because you still made $100,000.
Right. No, it makes perfect sense.
And they helped you do it, and you're using their money to leverage and get you there.
So how much money out of pocket does it require to
So it's 100% financing.
Right.
So you got that all covered. It's just a matter of covering your closing costs and your taxes and your insurance.
Which sellers are a little bit more susceptible to do nowadays?
They can absolutely cover it for you. There could be a scenario where you come into this home with just whatever your initial deposit was. So let's say you put an offer in on a home and the initial deposit was $2,500. That could be all you need.
Total money out of pocket, boom.
Correct.
And then you get keys to a brand new house.
Exactly.
Yeah,
In about 30 days.
Yeah.
There's definitely more details to the program and things that are dependent on you as a borrower.
Sure.
We would do that individually. But these are some bullet points of what people need to know to decide whether or not they want to come see us and apply for something like this. Again, you reiterated it. We don't know if we're ever going to see it again. So why wouldn't you is my thing.
Well, I mean, I think anybody out there that's listening to this podcast, Joe, and I certainly hope that this message gets out to a lot of people that are thinking or contemplating about buying a home, is that if you're going to do it, then you ought to do it now when this program hits, because this is probably going to be the best thing since sliced bread for the remainder of the year when it comes down to home loans, right?
No doubt.
Yeah, I mean, you can take a pass on it, guys, right? And you can take a pass on getting your hands on this type of loan, the CalHFA loan, or you can wait till it expires and then you can go off and get yourself a conventional loan for 20% down out of pocket, right? And then and you're probably going to get about the same competitive rate, I'm assuming, versus anything else.
Well, the other part of it too is through all this, through interest rates going up, which they're finally coming down.
Yep. Thank God.
Through everything, houses have not stopped appreciating.
Yep.
And no one's forecasting that it's going to stop this year. So if you wait another 6 months or wait another year, then something you could have got today for X is now X and Y because it's now worth more.
Sure.
Because there's a bunch of people trying to buy right now, especially as the rates continue to come down. There's gonna be more and more buyers. Kern County is an attractive place to be. People are moving here. Me and you see clients all the time, a lot coming from out of town.
100%, yeah.
And they're coming from expensive markets. They see a market like ours and they can't wait to buy. So
it's dirt cheap.
Especially for local people here, born and raised. Don't get priced out of this market. Don't wait. I can't tell you how many people told me, oh, during COVID I waited. Oh, after COVID I waited. Oh, I wish I shouldn't have waited. A bunch of stories like that. And nobody regrets buying.
Yeah.
I don't have those conversations.
Well, I mean, I think if anything else, going back to the very beginning of the story, is that, I mean, a lot of the people that might be regretting not buying are the ones that are still paying rent and it got jacked up by 20 to 30%.
Yeah, your rent can go up every year.
Right. Yeah, but your mortgage is fixed.
And it usually is, correct. So, another thing we talked about, another negative to renting is, it can continue to go up and up and up and up, and there's not a whole lot you can do about it.
No, you're at the mercy of the landlord at that point. And Joe, so this is going to be a fixed rate mortgage, right?
Correct.
And it begins April 3rd is the lottery when you can start.
That's when the portal opens. Closes on April 29th. So in that time frame, we need to help you get a pre-approval now.
Right.
So I can have you all ready to go.
So they can actually start the process like now.
They need to start it now.
They need to start it now.
Just in case.
Okay, good.
I can get you approved in a day, but what if there's something we need to take care of?
Sure.
What if there's a debt out there that needs to get taken care of? What if you recently had a job change, so that's going to take me a couple days to work through. We need to, if there's a hiccup of any kind, let's get in there now.
So you'll iron out all the details between now and April 3rd, and then by April 3rd, they're out the door and they can start shopping at that very moment right there.
Let's play the lottery.
Good. Let's play the lottery. Right. Exactly. That's great news. So, okay, good. So guys, listen, this is Joe Navarro, right, from Signature Home Lending. Reach out to him and make sure that you connect with him. And just like you mentioned right now, if you're looking at purchasing a home this year, especially in the second quarter of this year, there's no better time than now to get on board with this new CalHFA loan that's going to take place on April 3rd, right? So if you want to save money, out of pocket for a down payment, and more importantly, get yourself into a fixed loan for 30 years with very little down, if any at all. I want you guys to take Joe's information down so that way you can reach out to him. He'll definitely guide you and give you the blueprint on how to get yourself into the front door of a new home. Joe, why don't you do everybody out there a big favor and tell them exactly how to get a hold of you?
Absolutely. So to reach me direct, it's 661-343-1130. Again, that's 661-343-1130. Just reach out. It can be text. It can be a phone call. Either way, doesn't matter. We have multiple ways you can apply. If you are busy with work and need to do an application, we have an app. We can do it over the phone, or we can meet in person. It's really up to you as the client. What are you more comfortable with? And generally get you approved in about a day, So
yeah,
now, like you already said it, now's the time.
Now's the time, guys.
You're only a first-time buyer once.
That's right.
So, you want to be a first-time buyer the right way, so I can't think of a better way.
No, this is good business. I mean, honestly, anybody out there, Joe, that has been kicking tires and thinking about doing something, hoping, wishing, and praying and stuff like that, man, I tell you what, there's nothing better than, getting yourself into the front door of a new home with very, very little money down. But more importantly, also just, knowing that you're not going to, in retrospect, going to have any regret on waiting and contemplating, knowing that nothing like this might ever happen again in your lifetime, at least.
Most of the regret that we see is not buying.
Right.
Yeah. So with a killer program like this, it's a no-brainer.
What's the, before we close though, real quick, Joe, sure. What's the credit score that's required?
So, it's a conventional loan.
Okay.
So you do need to have pretty good credit to get it.
Okay.
So it's not an FHA loan, which is easier to get with lower credit scores. And there is some options to get in with there without the Dreams for All program that we're talking about. But you're going to want to be 680, 700.
680 and up, basically.
Yeah, because it's a conventional loan.
Yeah.
And you do need to be a little bit of a top tier type credit to get it. There are other options for someone that has no credit. We talked about my scenario and how quickly I got credit. We could do something like that. But if you have a scenario like that, then we really need to talk now.
Right.
We're running out of time.
That's where I was getting at. So like the folks out there that they may have like a bill, like you said, to pay off, or they may have something with their work that they might have to show proof of. But building credit doesn't happen overnight. And so, for instance, if you're 20 points off, being it's a conventional loan, it may, depending on your scenario out there, it may require just a little bit more time for Joe and his staff to help you out getting that credit score up to par where it belongs in order to qualify for this loan. So, Joe, with that being said, I appreciate you.
I appreciate you, man.
And thank you for your time. And again, if anybody else out there has any questions about buying or selling real estate, feel free to reach me at 661-213-6857. Otherwise, if you're looking to get a great mortgage with a great home lending specialist, contact Joe Navarro. And for everybody out there, make it a great day. And we'll talk to you soon. Thank you.
Thanks, guys.